MV3 Traders Futures Trade Radio is brought to you by The Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, how we doing? Welcome back to another week, Futures Trade Radio. Following a long, for me it's a long weekend. After that, a nice little slow holiday last week. I didn't even look at the market on Friday. I was working, but it didn't seem like, we had some sell off Friday. Yeah, I looked at it in hindsight and it was a little bit of selling, and that continued on throughout today's session. We gapped down, and to be honest, I'll be looking for that gap to fill at some point today. I see what has happened so far is like a big inventory zone. And it looks like we're starting to catch some lift off of all the inventory on what I would consider to be low participation. We're just above, like, for coming back from a Thanksgiving week. This feels like the volume feels sort of low to me, just above 100K. Coming into some MSRP. Or do we have VWAP below us? Starting to see a bit of a supply response right before MSRP. Look, this will be an MSRP zone. So I'm just popcornizing it at this point. I'll say there's a bit of a conflict between my trade bias per the strategy and the read I'm getting. Also since I'm just in watch mode. It's a good time to mention it on the schedule this week. We don't have anything today, of course, like economic news wise or economic events wise, but on Wednesday should be an interesting day. We got Powell speaking in the afternoon, and we got some GDP in the morning with some homes and some job stuff. A little bit more economic stuff coming out on on Thursday. Jobless claims and price index, PMI, and then employment stuff on Friday before the open or before RTH. That was an interesting supply response we got off of 750. We quickly found some inventory. Now we're coming back into that supply. And continuing to lift supply on a micro level, somewhat taking the stairs. Like we just caught the elevator. Mechanical response. Mechanical supply response. See if they bring price back down to inventory. I would look at this as a range between 750 and 740, and 740 being the main inventory point. It's been a while since we had some automation contribution. So at some point, we can expect automation to come back into play. Currently, automation is also sitting around 750. There's a touch of automation. Did get a quick inventory response. No real lift yet. It would have made sense for me to be a participant off of +1 if I was planning on doing that. It's a bit of a hindsight capital note there. What's going on, Timmy? Just signed up for Top Step. Let me know how that goes. I'm interested in how they're doing things over at Top Step nowadays. So we're slowly lifting that inventory off of 750. This participation is really much slower than I would expect. You know, you think you will have some excitement coming back from a holiday. Maybe there's some extended holiday. People extended their holiday a little bit or just waiting for something. Overall, they could be waiting to see what Powell has to say on Wednesday. There's another inventory lift off of 750.
Yeah.
So that gap fill, we will have to, once we clear PR plus 1, that'll fill the gap, which is kind of it. Well, this should be telling if we actually do that in the next few seconds here. We are trying to lift supply. There's a break. I got a couple more points before I would call it just before I would consider the gap to be filled. Right around like maybe 781. Need about another 10 points, and it looks like they may be happening soon the way that they're doing this. It doesn't surprise me at all. Oops. Also be aware of the trap. Of course, I'm not going to be the only one that's considering or just thinking about this gap fill. Something that the whole market is watching. Brought us back below that mechanical area where we were previously catching supply. And now they're just holding price there. I mean, technically, I would like to, just looking at it at a glance, I didn't really try to measure it out or anything, but you can consider this the gap is filled, but I personally want to see more. Be watching this to see if we break above that new session high. There we go. Almost got to 780. We don't have a whole lot of participation to really get that kind of movement that a lot of, momentum traders would like to see. Just slowly climbing the ladder. Or I should say taking the stairs. Okay, we just touched 780. Bit of negotiating here. There's a push. And now that we've taken care of this gap business, let's see if we can pick up a little bit of energy. I'll be seeing if we come back into the inside of automation. Now, if we're really how do I want to explain this? Kind of looking to see how serious our buyers are, versus what, the overall participation out here. And we, I shouldn't really see a whole, depend if the buyer, if we, really have a lot of, if our inventory has a lot of strength, there we go. We have a lot of strength on the inventory side, then we shouldn't see a huge retracement or pullback, but we really haven't had that much of a lift either. So we're still getting that mechanical inventory response off of automation. Actually kind of missed a trade trying to figure out how I'm gonna explain what I'm trying to say. Be looking to see if we get back above 781. So I have a box that I'm looking at now. It's above 781 and PR plus 1. Because now it looks like we're at the beginning of a rotation back inside of the neutral zone. The inventory level to clear be around 764. then that'll take us into a lot of noise. But we don't have a lot of volume down there, like between that 764 to 760 gap. There's a volume gap there. And then technically we could possibly see some sort of response to 756. So there's a lot of levels that you can look for a technical response from this point downward. Like, well, we're in this range to where I would call it like a battle zone. To where, you know, it would make sense to see price bounce up and down without making any real strong directional movement. And with 10 minutes before halftime, it looks like this is going to be a no trading day for me. This would be a fun one to go back and watch the game film on.
Order filled. Order filled.
Nowhere. So I did take I had a trigger that I took for like a small scalp. It didn't fill, and it only filled in like maybe one of my accounts. But I'll make that one. That's a one and done for me. Sometimes I'll just pull the trigger just to make sure I don't get trigger shy when like if I'm being more discretionary, like so this morning I was being more discretionary than just, you know, than robot trading out, you know, as a way to put it. And during those times I will, if I get a trigger, I'll just pull the trigger even though I may not fully believe in the trade. So that was one of those moments, and it only, because of how volatile it was, it only filled in one area for a tiny gap. For a tiny scalp. Which in hindsight, for my strategy, that was a good decision. So I try to make sure that I just stick to my plan and my strategy, you know, no matter what. So it's just about price movement for me. So whatever happens inside. So when I pull the trigger, and if something doesn't feel, well, that's not my problem. I still got to execute the way that I would execute if I would have gotten filled, right? So I did get filled in one account, so I'm still pushing the buttons like all of my accounts were filled. I'm not worried about, oh, I didn't get that one filled, let me wait on it so it can fill. Nope, I'm trading it like I would trade it if it was filled. You know, and like usually if I go against that and I try to adjust my trading to what took place, or to a mistake, or to something mechanical, like, or if I just didn't get filled, something like that, then it usually ends up going, not working out in my favor. So from that, I learned, let me just trade it as if everything traded perfectly, or let me execute as if everything worked out perfectly, regardless of what happened. And because this risk management is extremely important, and for me, that's a proper risk management technique. I know for a fact you can bleed out on a lot of tiny cuts. So consistency. Making sure you stick to your risk management as best as you can be key. Now, I'm not gonna get into all of that. May change my trigger topic. Let's see. Do try to plan those out, but I also have to stay in my water state and go with the flow. Okay, so we're continuing to drop inventory. Coming back to that MSRP zone that I mentioned before at the open. Still kind of in the same place, so that MSRP is around 740. Nice mechanical inventory response off of MSRP, off of 740. We are getting some order flow. Should take us back to automation above at 755, above 755. So something to keep an eye on. But at this point of FTR, it's halftime. MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, welcome back to the second half of Futures Trade Radio. And in this segment of trader triggers, I wanted to say that so much differently in my head, but in this second half of Futures Trade Radio, we have trader triggers. And for trader triggers today, what I want to talk about is the worst thing that you can do if you want to make it as a trader. Now, this is probably going to be a short one because it's really simple. Right? It's not really complicated. There isn't really a whole lot of levels to it, to be honest. I mean, it's just about, we'll get into it. I'll talk about everything, go into details about the worst thing you can do, but it's probably be a short one because, it's not about a time thing for me. Ever since I was in the military, we have this thing to where, that I adopted to where I like to train to standard and not to time. So once I make the point is made and I have nothing else to put in the point, then that'll be the conclusion. And I'm not going to do this just to make it a time-based thing. So anyway, with all that being said, let me just go ahead and get into it. So what is the worst thing that you can do if you want to make it and you want to be a successful trader? Whether that's swing trading, day trading, even especially with long-term investing. There's a saying, or there's a idea or concept in this bit in investing, to where people say, it's more of a cliche, where people will say time in is better than timing, right? Which leads to the worst thing that you can do if you want to be successful in this business is to quit, right? So, and I think this has come up for me a lot because of the times that we're in, and what this year has brought in terms of the markets and trading and investing and all of that stuff. That it's been, if you just listen to the sentiment of the across the board of the market, it's been a lot of frustration, a lot of struggle, a lot of impatience, and in these types of times, it is conducive for people having the feelings to just give up and be like, no, this is not, the stock market is a scam and it's too manipulated and all the stuff, right? Now, the way that I look at this is the only real competition in this environment, in life, just in general, is yourself, right? And I'm always talking about all of this stuff as a mirror, and how you're seeing a reflection of yourself, of the collective consciousness. We get the benefit of seeing all of that inside of these charts. So if the competition is if you're the only competition, then all of that other stuff, why people that would tend to lead people to quit, is kind of irrelevant. Because believe it or not, there are people still making money in this environment. There's people making a lot of money in this environment. And also, it's kind of, I had this idea this morning to where an idea that returned to me, that this year has been about wealth transference. And like just by the way that this market has, the trading how prices moved. Like we've had some selling, but it hasn't just went straight down in in a way to where you pretty much had to be lucky to profit from it, right? Usually when you have those big crashes or that big sell-off, in order to profit from that, even market makers, like, they'll get to a point to where, well, I've heard this from several market makers, to where they say when things get really bad, they'll just step away and they won't do anything until they see what they see the things that they want to see in order to jump back in there, right? I think they probably have created some rules and stuff around to where they can't do that as much anymore, which probably also adds to what we're seeing. But my whole point in saying all of that is this is still an environment to where you can produce income, where you can make money, to where you can trade successfully and you can still be profitable. So understanding that, there's a quote that I saw. I forgot to write down who this quote came from, but it was a video that I was watching. But basically the quote is, if you quit on the process, you're quitting on the results, right? So trying to think the way I want to approach this, because two different ideas just came to me at the same time. All right, I'll take it from this way. With I like to give personal examples of what I'm talking about. And well, let me make this point first. I think in this moment, if you're new to this, or even if you've been doing this for a while, but especially if this is your first time seeing this type of market, this is the time you want to pay the most attention, because this is the most revealing time, in my personal opinion, of what this environment is about, how price moves, how different participants go about their business of, participating, right? And there's a lot to be learned with how prices move within the last, several months, right? So on that note of things being, the learning lessons inside of this whole, what we've seen so far. Every time that I come into a losing streak, or, if I have like a setback or a drawdown or something like that, and I keep going, like, I've gained so much knowledge and so much insight from, just keep going, like, from continuing to work at it after taking a big loss, or after having a drawdown, or after a series of losses, to where it was either, well, it's always the way that I've always looked at it in hindsight, it was always something that I did. And in that, I was able to learn a lot and, gain a lot of knowledge and information that it's built my trading tool bag to a point where I have a lot of tools at my disposal now. Now, the only way I was able to get that, or to get to this point, was when I had those moments. Now, those moments did trigger emotions, and I was feeling a certain type of way. Now, I never had the feeling to quit. Like, that's just never been a thing that came up for me. I was frustrated. I may have been emotional, right? But I never felt like I wanted to quit, or this just wasn't the environment for me. Like, it may have been something like, maybe I need to learn more, or it was really something that I personally needed to work on, because what's been revealed to me the most is things about myself that I can improve, which is probably why, I love this environment so much, and I love this business so much, because it's a direct reflection. It gives you everything you need to know about yourself, if you want to look at it that way, right? So me coming to that realization that on the other side of this struggle, this period of struggle, is more information, more knowledge of self, basically improvement. That just flipped. Like, once I came into the awareness of that just changed the whole dynamic of all of losing and winning for me, right? and of these drawdowns and these setbacks. That was a pivotal moment for me, because once I finally understood that, it took a while, but once I finally understood that, then I stopped getting emotional and frustrated when I have a setback or a drawdown. And now I kind of get excited. Now, I don't want to go through a setback or a drawdown, right? I don't want to have these periods of struggle. But when I'm at that moment, I remind myself that every time I was at this moment and I kept pushing, I made it through, and I took the lessons and I made whatever adjustments I needed to make. Even as simple as an adjustment being to be more consistent, then I just came out so much better on the other side. So it's like when you reach those levels of struggle, when you reach that drawdown, that period that makes you want to quit, it helps to understand that if you keep going, all you got to do is keep going, and you'll make it on the other end to a higher level, or with a better, perspective, a better understanding, right? But you got to go through it. And of course, it helps the more open your mind is, the more you're open to whatever the universe is trying to show you or trying to tell you. The better it'll make those periods of struggle, right? And this whole thing is a psychological thing. So that's basically what I'm talking about, is a psychological play to where you're just kind of changing the narrative and flipping the script. It's also setting you apart from other traders and your quote unquote competition, to what other people, what most people see competition as. So if you're gonna say other traders or other participants are your competition, well, looking at a drawback or a setback or a drawdown or a setback as a positive thing, and you kind of get excited about that, what that does give you an edge, and that kind of sets you apart from the crowd. So if you just got into this, and of course there's multiple, this is not black and white, there's a full spectrum of possibilities within everything that I'm talking about. But if you just got into this and you're just you was curious about it, you heard all the people talking about how much money they made in the stock market or from trading, and how much, all the percentage that they made from GameStop and Bitcoin and all this other stuff, right? You done heard the noise, and that got you interested into this environment, into this business, and you wanted to try it out. And then you get to that point to where it just gets too difficult for you, and you just decide that it's not for you. If you're being honest with yourself in that moment, that's cool, right? There's nothing that's for everybody. So while I would highly recommend everybody find some way to invest in the financial markets in some way, this environment really is not for everybody, just like there's no environment that's for everybody. So if that's the case for you, and you're quitting because it's just not vibrating with your frequency, then that's cool, right? But if you have that desire, you came into this business with the desire that you're going to figure this out, you really like this really interests you, it keeps your attention. When you're not trading, when you're not actively participating, you're still thinking about the markets, you're still thinking about how you can execute and how you can perform, and it's something like you get excited. It's just a feeling that you have, and the only way you can know if this is for you or not is you got to be in tune with your feelings, and a feeling that you have to where you just know that you want to be a trader, or you want to be an investor. Get excited when you get to these moments of struggle, because that's when you know that you're about to make it to another level, you're about to progress, and you're about to level up, right? And it's really that simple. So, on the topic of quitting, there's a saying that I like to say a lot of times, a belief that I have, right? My philosophy on it is the only way to fail is to quit, right? So If you really don't want to fail at this, then just don't quit. Keep pushing. As long as you're trying, you're not failing. Because it's impossible to fail at something that you're still working at, because you're still working at it. To fail means you tried it out, it didn't work how you wanted it to work, and then you just stopped doing it, or you couldn't do it anymore. But as long as you can, even if you're just paper trading because you ran out of money, you're still working at it. You're still getting the screen time in. You're still working on your execution. You're still sharpening your skills. You're still learning the environment. You know, you're still vibrating in the frequency of this business, and the more that you do it, the better you're going to get at it, right? Another universal law. The more you do something, you're going to get better at it. Now, if you do it, let's just say if you do it 30 minutes a day versus 3 hours a day, of course, you're going to have a faster progression in general, doing it 3 hours a day versus 30 minutes a day, right? Again, going back to the first thing that I mentioned, time in is better than timing. Because you may hit that big GME trade, right? You may have luckily bought a call option on GME, you know, when it was below $10, and then you got the big lift, and you were smart enough to take the profits when it was at its, at one of its heights. But if that was a lucky thing, because you just did it and you really haven't been in this business for that long, and you haven't seen the different cycles and all that stuff, big picture is gonna kind of put you, it's not gonna mean as much for you as it would if that was just a play that you got, but you've been in this business for 10 years, or you caught that one GME play, but you're still trading, you're still participating in other areas every single day. Right? So that's really, that's the topic. That's really, because like I said, it's really that simple. So basically, if you don't want to fail, then just don't quit. Keep going, and know that on the other side of whatever you're struggling with is a higher level. So on that note, I appreciate everybody for coming through. Appreciate you, Timmy. And until next time, trade it easy.